India stock markets snap the 3-day losing streak and higher. Sensex up 376 points. Nifty ends at around 24,950. FMCG and banking stocks up 1%, while capital goods, information technology, metal, telecom, media, oil and gas, power and realty are down anywhere between 0.3 to 1%. The BSE mid-cap index down 0.3%, while the small-cap index sheds 0.6%. Investors on Dalal Street will have the option to select from at least 14 IPOs set to come out in the coming week, making it one of the busiest weeks for primary offers in recent years. Together, these 14 IPOs are aiming to raise nearly 9,000 crore rupees from the market. Of the 14 IPOs, 3 are already open and will close next week. Electric two-wheeler maker Ather Energy files its draft red herring prospectus with the capital markets regulator SEBI to raise funds through an initial public offering or IPO. The proposed Ather Energy IPO is a combination of fresh issue of equity shares worth 3,100 crore rupees and an offer for sale of 2.2 crore shares by the promoters and investor shareholders. Low-cost carrier Indigo is set to significantly expand its international network, aiming to increase its destinations from 20 to 40 by the end of the current financial year. According to media reports, the plan is part of a broader strategy to establish Indigo as a leading global airline by the year 2030. Adani Green Energy announces that it has fully redeemed its $750 million holdco notes issued in September 2021 with 4.375% interest rate. These notes were originally set to mature on the 8th of September this year, according to the company's statement. Union Minister for Road Transport and Highways Nitin Gadkari indicates that the need for subsidies and incentives for electric vehicles may not last beyond the next 2 years. Speaking at a public event, Gadkari highlighted how the cost of electric vehicles are expected to align with those of petrol and diesel vehicles in 2 years, making additional financial incentives redundant. The Hyundai Alcazar facelift, after being fully unveiled recently, has been launched at 14.99 lakh rupees in India. The prices of the diesel variant start at 15.99 lakh rupees ex-showroom. The 3-row Hyundai SUV now features a design that closely aligns with the updated Hyundai Creta, including a similar grille and headlights setup. US Republican presidential nominee Donald Trump reignites the debate on de-dollarization by threatening to impose a 100% tariff on countries that shift away from using the US dollar for trade transactions. He says, and I quote, "You leave the dollar and you're not doing business with the United States." His pledge comes amidst growing discussions about the global dominance of the US dollar and how countries are exploring alternatives to reduce their reliance on it. China's core inflation cools to its weakest in more than 3 years, adding to signs that policymakers are struggling to get household spending and further putting the annual growth target under pressure. The consumer price index rises by 0.6% in the month of August from a year earlier, less than the median forecast of 0.7%. Excluding volatile food and energy costs, core inflation in China rose by 0.3%, the least since March 2021, indicating a lingering weakness in overall demand. We put the focus on the all-important 54th GST Council meeting that is set to get underway. What can we expect from it? Let's discuss. The 54th GST Council meeting, chaired by Union Finance Minister Nirmala Sitharaman, has commenced today with the state finance ministers and tax officials in attendance. Tax experts anticipate key discussions around rate rationalization, a possible reduction in tax slabs, and addressing the inverted duty structure. The Council may also lower GST rates for sectors like online gaming and insurance, with the current 18% GST on life and health insurance premiums likely to see a reduction. In addition, talks are expected on plans to revamp the tax slab structure as a whole, as well as the issuance of notices to companies with overseas operations. The GST Council is likely to be presented with a status report on rate rationalisation by the GOM, or group of ministers. The GOM is likely to inform that discussions need to start afresh on rates, slabs, merger of slabs, simpler rate structures, and correction of the inverted duty structure. Meanwhile, the government has reconstituted the GOM, which now includes 6 states: Bihar, Karnataka, UP, Rajasthan, West Bengal, and Kerala. Earlier, the GOM, or group of ministers, was a 7-member panel, with Goa also being a part of it. To talk about it further, we have Ritesh Kanodia, partner, Ortus Legal, set to join us. But for now, we have Anita Rastogi, principal, Pricewaterhouse & Co. LLP, joining us. Anita, thank you so much for taking time out to be with us. Talk to us. What are your top 3 expectations that you think will go through at the end of this GST Council meeting?
Yeah, so the top 3, which I think will go through, though I have many in the list, is the first one is regarding the clear clarification on the foreign airlines, as well as on issues like Infosys. As we know that tremendous amount of demands have been issued with the foreign airlines, around 10,000 crores, and with Infosys from 28,500. And the issue is one simple issue, that whether an Indian branch is actually receiving some taxable services from their parent office outside India, and whether that can be considered as a deemed supply under GST, and hence, even if there is no consideration flowing amongst each other, still GST is going to be applied. I think that is the core issue which needs to be resolved one way or the other, and we do hope that some clear clarification comes out from this GST meet. That is one. And the second one is there are various other areas, in the sense like, you have the schools who actually pay affiliate charges to the board, which is the CBSE. There also huge demands have been raised. Whether that is really a supply of service or not needs to be clarified. And the last one is, of course, on the various areas of rates, especially on the insurance sector. The fitment committee has actually given 4 options, and they themselves have not been able to decide which is the best option. They have now placed it before the GST Council, as we understand. And the 4 options which they have given is that whether the the GST rate on the health insurance and the life insurance, which is currently at 18%, should be completely exempt, or it should be only exempt for the senior citizen, or it should be essentially only on certain aspects of that particular insurance sector, or a hybrid. So they've given various types of recommendation, including a rate reduction also, that whether it should be at 5%. And now they have put it before the GST Council for them to decide and deliberate on this particular structure. And the last one I would like to say is that a lot of these FMCG companies are also facing huge demands on various classification of namkeens, etc., whether it should be 12% or 18%. I think that also clarification, something which we really think should be coming out in this GST Council meeting. Though I must say that there is a lot of expectation from the industry, and many, many areas which we believe the GST Council is required to look at, only for the reason that today is a time where I don't think that the businesses want to spend time in litigation, fighting a case before the court. It is better to get clarity, and GST Council is the best person, or I would say an institution, who can actually clarify a lot of these things.
Right, Anita, stay with us. So we also have Ritesh Kanodia, partner, Ortus Legal, now joining us. Ritesh, talk to us. I'm going to ask you the same question. What are your top 3 expectations, or in terms of what do you think are top 3 things that will go through with this GST Council meeting?
Hi, sorry, I'm late and I missed what
no
has already been
whatsoever.
spoken.
Please go ahead.
Let me stick to the agenda, which is sort of, been discussed. So one of the top items, of course, is the health insurance, GST and health insurance. And I think there has been a lot of discussion around whether this should only be restricted to exemption to senior citizens, or whether there should be an overall rate reduction. I think the demand is an overall rate reduction. And I think the rationale is that with an overall rate reduction, the insurance premium would become more feasible. Of course, from an insurance company perspective, one thing which they would be mindful of is loss of credit, because if you exempt anything, it defeats the entire fungibility of credit, and therefore, the credits get restricted even if there is an exemption. Even if the rates have reduced on the output side, there is a loss of credit. So, of course, they would be more looking at 12%. I read somewhere, and I'm not very sure about it, this entire controversy on grants to the research grant. I think there the decision has been taken that it is going to be exempted. Legally, any which ways, it was not supposed to be liable because there was no quid pro quo, there was no consideration. So that is, I think, one of the key areas. Online gaming is an agenda of discussion, and I think the largest issue in online gaming still remains is the past demands. I don't think so that going forward the government is going to withdraw the 28%. I don't think so. That's the intent. But what the industry is clearly expecting is with respect to the huge notices that were issued for the past demands. There was also this discussion on exemption to payment aggregate. So there is an exemption for UPI transactions, credit card transactions below 2000. And I think there was some discussion around withdrawal of that exemption. What I hear and read is that that has been deferred. I don't think so that is going to come through today. There was this entire issue on road construction, whether road constructions were liable, and there were contradictory clarifications which were issued in the past. While on a going forward basis, all these road construction activities are liable to 18%, and that is what probably the industry might have taken a view. I think for the past period, wherever they were receiving annuity in lieu of toll, that litigation continues. And at least for the past period, there is an expectation that there would be some sort of a clarification to say that those construction activities were not liable. Unfortunately, the amount of GST is also not being reimbursed by NHAI, thereby putting a huge pressure on these companies who are into construction of roads. One of the issues that I have been hearing about is the clarification on intermediary for advertisement agency services, and this entire controversy on whether when you provide services in an advertisement agency, whether it is a P2P contract or a P2A contract, and whether you should pay GST on those advertisement agency services or not. And I think here the major component is the media cost, because there is one broad understanding that media is procured on behalf of the customer and therefore is an intermediary activity, whereas the advertising agency has always been taking a view that it is an export. So some clarification on that front is clearly expected. You've been seeing a lot of notices very recently on like the airline issue, for example, whether the branches are liable. Then this entire Infosys issue, whether the branch is liable or not in India under reverse charge mechanism. So all of this, I believe, considering the past trend, the government may just pick it up and want to sort of clarify rather than heading into litigation. That is what we've been looking at.
Right.
My last point is rate rationalization, and interestingly, now there is a different debate on whether there should be any attempt on tweaking the rates, because there is a huge revenue implication involved. That is what the states are saying, and we do not know what will be the final decision taken in this regard. So, this would be all from my side.
Right.
Yeah. Thank you.
All right, Ritesh and Anita, stay with us. The 54th GST Council meeting, which is going to be underway, could bring in possible relief to individuals and senior citizens with a likely reduction in GST on health insurance premiums. According to a report by ANI, quoting sources, the council is set to discuss lowering the current 18% GST rate on these premiums, a move that could ease financial pressures on those seeking insurance coverage. A fitment committee consisting of central and state tax officials reviewed the proposal to cut GST on health insurance premiums on Sunday. Their findings, along with an analysis of the revenue impact, will be presented before the GST Council today. While a complete exemption from GST on health insurance premiums is on the table, the existing 18% GST rate on group health policies is expected to remain unchanged. We'll have to wait and watch what this 54th GST Council meeting will end up with. But let me take it back to Anita. The other important discussion is what's going to happen to finance aggregators in terms of those payments less than 2,000 rupees. Will they come under the ambit of the GST? So far, they don't.
Yeah, so basically there is this discussion that, even they should be coming in because that is one very important area for revenue augmentation by the government. But I think there is what I'm hearing is that it has been put on hold for this, for the time being. So maybe in this GST Council meeting, they may not be looking at that, but there's clear desire of the government that, that exemption should go away and everything should be taxed, largely because the e-commerce and all those aggregator businesses really doing very well, and it really helps in the revenue augmentation of the government. But I don't think they will do it this time.
Okay, don't think you'll do it this time. Ritesh, your take on the matter?
No, I already mentioned, right, this has already been postponed. I think it's come in some news flashes that they're not going to take any decision. See, one important aspect is of this entire below 2000 was to make the transactions cheaper and therefore not to levy GST. You've been seeing this entire UPI, scaling which is happening across India, where the government is trying to see that there are no charges for a UPI transaction. On a similar line, for smaller transactions, the government wanted to sort of exempt them, and this was the past. Going forward, also, see, one thing you need to be aware of is that while they may levy GST, it may not necessarily be bad because the aggregators who are involved sometimes actually have to reverse their input tax credit while claiming that exemption. Though ultimately the banks suffer because they are under a 50% rule. But for this kind of credit card businesses, they are under 100% registration because they get full credit for credit card business. So maybe from a credit fungibility perspective, this may not be a bad thing, provided the banks pass on the benefit to the customer.
All right. The other thing I want to ask you, Ritesh, is that the online gaming industry is hoping for some kind of relief. They were originally taxed at a slab of 18%. Now that tax has gone up to 28% on the platform fee. There's lots of fears circulating the online gaming space, which is also a fast-growing space in the country.
No, absolutely. And honestly speaking, I don't see any way forward, at least with the tweaking which has been done to the provisions of the law. I don't think the government has an intent to take away the taxability. One thing which we need to witness closely is whether what happens to the past, because there was a position being taken by the industry that games of skill are not covered, and that got sort of nullified by the GST Council to say that no, even games of skill are covered. And all these gaming companies are witnessing thousands and crores of notices. I think the starting point would be what happens to the past. Going forward, my understanding is that the industry has already started paying the tax. So they would first be looking at the past and then maybe going forward. I don't think so. Government has an intent to withdraw the taxation of 28% on gaming.
Anita, is there a chance that, if not withdraw that tax, at least rationalize it and bring it down further?
You're talking about the online gaming,
yes,
or normally talking about...
No, online gaming, casinos, all of them.
No. I don't see that the government is at all interested in reducing the rate of that. In fact, I did read some months ago that they were looking at the revenue collections, that even though initially when it was 18 and then it became 28, etc., a lot of people said that this is really going to dampen this particular sector, it's going to impact it, but it has not apparently. People want to play, and the revenue is actually increasing. So I don't think that the 28% is going to down. I don't think at all.
Okay. Ritesh, let me come back to you on the entire issue regarding the health and life insurance premiums. This is going to be crucial because we are in a country where insurance is still not well penetrated. Not even in the big cities, leave alone rural and urban areas. So this is going to be a crucial move, not just to provide relief to the insurance industry, but also to help in the penetration of insurance.
No, you're absolutely right. If you look at the premium cost, that has only been increasing. So, if I keep aside GST for the time being, even the premium costs have been increasing. You must be aware that in the recent time, there was an amendment where, hospital rooms above 5,000 rupees were made chargeable to GST. Right now, what happens is when a patient goes to an hospital and there is a claim, right? If a GST is charged on the hospital room, of course, the insurance company has to bear that cost. So on an overall basis, we have already been seeing that increase. But going forward, my understanding is that the industry is already started paying the tax. So they would first be looking at the past and then maybe going forward. I don't think so. Government has an intent to withdraw the taxation of 28% on gaming. Even the premium cost, that is only been increasing. And it was always necessary to rationalize the GST cost on premium. It just doesn't make sense, right? Because you're talking about life, you're not talking about general insurance. The other crucial aspect is that the premiums that you pay are not available as a set of the GST on those premiums. So end of the day, it becomes a cost to the end consumer, and specifically individuals' health policies. It's important that they go cheaper, and with you are also seeing the income tax benefits also being withdrawn gradually. So yes, there is a very good case to at least bring down the rate, not fully exempt it, because otherwise, the rates effectively don't come down. There is a credit which is going to get lost if there is an exemption.
Anita, one last thing before we wrap things up. There are other rate cuts that are expected that were being hoped on. One is the cut in GST on cancer drugs, electricity meters, and also possibly, some kind of GST rationalization in real estate sector as well. Anita, if you can hear me. Anita? All right, I don't think Anita can hear us. Ritesh, let me bring that back to you. Ritesh, what about these aspects? Do you think any of this will happen? Possible rate cuts, on GST rate cuts on cancer drugs, electricity meter services, and also possibly relief for the real estate sector?
So cancer drugs, definitely yes. Maybe they might bring down on meters also, because if you see the output, electricity is exempt. So whatever GST that is incurred on electricity meters become a cost for the electricity company. On the last part, a couple of years back, not months back, there has been an entire restructuring done for real estate industry on what rate should apply, etc., and all that. Now, I think the largest issue that, to my recollection, remains is the land, because what is the value of the land that needs to be deducted. Right. And there are contradictory judgments on whether the actual value or the notional value needs to be reduced. That is my recollection of this entire controversy, and maybe that is what the industry is probably looking at to say. And the other larger issue is the development rights, where the industry is saying that it is akin to land and therefore should not be taxed. The matter is already subjudiced, and what we have seen is typically where matters are before the court and are subjudiced, the government doesn't interfere.
Okay. Well, a lot is riding on this 54th GST Council meeting. I'm afraid we've completely run out of time here with that. Ritesh Kanodia, partner, Ortus Legal, thank you so much for being with us. And of course, Anita Rastogi, principal, Pricewaterhouse & Co. LLP, thank you so much for being with us. And with that, it's a wrap here from my side. Thank you so much for watching. This is Krishna Kumar signing off.
Joe Biden is not going to be the Democratic presidential nominee.
I made my choice. Kamala Harris. She's experienced. She's tough. She's capable.
I took on perpetrators of all kinds. Predators. So hear me when I say, I know Donald Trump's type.
I am the one saving democracy.
He has tapped in to the fear and anxiety about demographic change in the US.
This polarization in the United States. Some people are even suggesting that there could be a civil war.
You are this unable to solve your own domestic problems. You have no right to claim to be anybody else in the world. And we're moving into a multipolar world where the United States will not lead.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
Why is the state not looking at putting an embargo on that?
As a Telangana person, I will not accept.
How do ordinary folks deal with this?